Joining me now, Fisher Investments founder Ken Fisher. And Ken, you've laid out a whole series of help on sentimental analysis, normal analysis, and dummy analysis, all for drumroll dummies. Let's begin with sentiment.
So first, there's all kinds of ways that people create complicated functions to look at sentiment, and there's nothing wrong with that. But said simply, your viewers, Charles, and thanks for having me back on, your viewers can easily themselves get a handle on the middle of the Templeton curve. It's real simple. It's so simple nobody can see it. When you look at, I mean, they can all do Google searches. You do Google searches for upcoming economic releases of things like GDP numbers, inflation, PMIs, Purchasing Manager Index numbers, employment, unemployment, and you look for consensus estimates for what those will be. And then you wait. And you see, when they come in, do they come in worse than, at, or better than consensus estimates? If, as we've been seeing just recently, they mostly come in better than consensus estimates, you know we weren't overly optimistic, because if we were overly optimistic, the consensus estimates would have been stronger relative to the reality. It's really simple. But so simple people can't get it.
Yeah, but so essentially, though, Ken, you're saying that we've got to get the evidence, though. In the heat of the moment, so to speak, we don't know if we're over optimistic or not.
In the heat of the moment, Charles, we're getting economic releases every week, one way or another. You can do this on a continuum basis. You can actually know. I mean, just think about the notion said otherwise, because there's so many anecdotals that you can get. It's only the Magnificent Seven. Right. You hear that all the time, right? Well, if it's only the Magnificent Seven, then that's a negative statement. The more you're hearing negative statements, the more you know you're not euphoric. In a bubble, nobody thinks it's a bubble. The reality is, if it's a bubble and it's only the Magnificent Seven, then where are the IPOs that you have in abundance every time you have euphoria and a bubble? Right. You follow that?
I got you.
It's really, really simple. But let's go a different way.
Okay.
And let me take you to a different point, if I can. That it's only the Magnificent Seven argument, you know, is nonsense. All you got to do is look around the world. All you got to do is see France, Germany, Italy, the Netherlands, all bottoming when we bottomed, all hitting all-time highs. Italy, total return, big dividends, value-oriented stock market, not growth like ours. These aren't the Magnificent Seven. They're hitting all-time highs. That can't be the case if it's only the Magnificent Seven.
So Ken, let's talk about then the soft landing, because I read somewhere where you say the talk itself of a soft landing is just idiot talk. I mean, those are pretty harsh words. What do you mean by it?
Well, I use phrases like idiot pretty commonly. I think it's Webster.
I know. I'm not taking it personal, but we have a sensitive part of the audience.
Charles. But you know, earlier when you were doing the intro here, you were talking about all those drugs and you talked about a painkiller. I got to believe you really don't like painkillers. I believe that, Charles.
I don't.
So think about it, because I don't think people think about it. Just go back and look at GDP growth numbers on a global basis before COVID. Every single year from 2013, as we went through that whole period about the pigs crisis, until COVID hit, GDP growth numbers were between 3 and 3.8% every single year. COVID hits, the government constricts the economy purposefully, which is kind of different than a normal recession. GDP plunges, but actually for the year, because we got the bounce back starting in the middle of the year, GDP is only down 2.8% that year. The next year in 2021, it's 6.3% because that bounce back is continuing. Now, I just want you to think about that, because from there, that was the abnormal year. Normalcy post-COVID doesn't feel normal. Since then, the last 2 years have both been 3 to 3.5%.
Right.
We're back to normal. It just doesn't feel normal. There's no soft landing. The reality is there's no landing at all. We got to 6.3% numbers, and it feels like a descent as you went back to the 3.0 to 3.5 numbers. It's a return to normalcy that doesn't feel like a return to normalcy. People have a hard time post-COVID. I mean, even the concept of the Magnificent Seven, it's an attempt to see everything as abnormal. And the more you want to see everything as abnormal, the more you miss the degree to which this is a pretty normal bull market.
Great stuff.
Which doesn't mean, of course, that it doesn't go down next week or next month.
Sure.
Because markets are volatile in the short term. But in the long term, markets are truth tellers and fortune tellers, and they're pretty good at it and way better than a crystal ball. And we're returning to normal.
Yeah.
We've returned to normal.
Ken, I mean, I got to be honest, really great stuff. Really great stuff. I love the way you laid it all out. I hope you have a great weekend, and we'll talk again real soon, I hope.
Thanks for having me back, Charles.
Thanks a lot.
Always.
Absolutely.